We will now request the panelists to take the stage and conduct the panel discussion. Give them the mics. Mr. Arun, Mr. Atul, Mr. Saurabh, Mr. Chirag, and Mr. Nangachetan.
Hello.
Hi, Ketan Patel. I'm going to be the moderator for this panel. When I was told about the topic of discussion and while making notes, on how things will work in 2035, the leaders who are going to shape it, every time I went through my panel's profiles, one thing was common. That hope I'm not there in 2035, right? I'm retired, sitting on the sidelines and eating popcorn and see all these guys deliver what they are going to say, right? So, so thank you for joining. Saturday morning, tough, but thank you. First question to, why don't you all introduce yourselves for the audience? Just 2 minutes, yourself, what each of your companies are doing, so they have some context.
Sure. Hi, my name is Arun Ramamurthy. I'm the co-founder of a company called Stable.health. We are an insurtech, which is focused on distribution of health insurance.
Hi, I'm Chirag. I am founder and CEO of Pulse. We are a data-driven machine learning business based out of Mumbai, serving the global market, especially in the lending space.
Hi, this is Naga Chetan. In short, you can call me Naga. So I am co-founder and CEO at Navank. As the name suggests, Navank means a new number. We are trying to create the entire AI-enabled stack for secure lending in India. In the process, we are trying to create CIBIL equivalent for properties, so that the property-based lending becomes very easy for customers and banks.
Thank you. So, I'll start with Arun. Arun, Stable sits at the intersection of health and finance. By 2035, do you see health data becoming a primary determinant of financial eligibility? How do we build a wellness ecosystem that insurers and lenders can actually trust?
I think health, any data is always, very critical for decision making, and I think health data is also a very important determinant, especially when it comes to insurance. Today, if you look at how insurance is underwritten, most of it is in broad swaths of decision making. Look at age, look at pre-existing conditions, look at geography. But if there's granular data available with, in terms of health records, could be fitness data, could be something as simple as blood reports, or could be more complex like genome data, I think it will enable granular pricing decisions. So in a very price-sensitive country like India, I think that will open up avenues for millions of people to come into the fold. And in answer to your second question as to what will enable it, I think the important thing is to have trust in place. We need to have a consent architecture. I mean, we saw that in the case of lending with the credit bureau. I think a similar architecture is required on health data as well.
So we've started doing something on health. 10% of the appraisal is dependent on your BMI. So if you are less than 25, you get 10, or you are penalized on your appraisal. We are saving a lot of money on that. Atul, my next question is to you. You are focused on serving the underserved and the semi-urban markets. As we look towards 2035, what is the biggest risk in lending to Bharat? Is it the lack of data, or is it the lack of products for non-salaried people?
Sure. Sorry, didn't get a chance to introduce myself. I'm Atul. I run a company called Basic Home Loan, and we're trying to digitize home loans, especially for Bharat mid and low income households in tier 2, tier 3 cities. So yeah, this question is right. The thing which we are trying to solve. See, I think that the problem is that we are thinking is looking everyone from the same lens. Let me start with an example. If you go to a tier 2, tier 3 city, there is a farmer or maybe a businessman. He's not earning for the whole year. His income is seasonal. So, when we see the ability and intent of that customer for lending, we are trying to fit a model where we are not taking into account the seasonality of income. So, the question you asked, the problem is not data, problem is not the availability of cash with the lenders, or any kind of lender in India. I'll say the problem is the model which they are using. They have to customize it for Indian requirements, and especially for people in I'll say non kind of traditional sectors, means people who don't have fixed income or who are living on cash incomes. We have to build models for them. We'll have to build new products for them. So to answer your question, I think the major problem is on the product side, not on the data side, not on the money side. There are so many lenders who are sitting with tons of cash. They all want to deploy their money, but the thing is, when they try to evaluate the customer, they evaluate him ki monthly income is what, so that whether the customer will pay EMI or not. A simple thing here is, why for the same customer I said whose income is in seasonality in their income, why can't we have a payment mechanism which is seasonal? Suppose for a farmer, he has his harvest in one particular season, and we tell him that you don't have to pay every month, you have to pay only in these months, and then maybe your tenure is adjusted accordingly. So those kind of problems are there, and that needs to be solved. Today we just see the civil data, and we just see how much bank balance or cash income they are getting. People have developed models to gauge the cash income also, but they are not trying to fit it into the right approach, how to gauge the eligibility of the customer. So that needs to be solved for.
So are you creating a product like this? Because it's very exciting. What you said is right. Farmers get money three months a year, at best 6 months if they are doing 2 crops a year, right? How do you give them a loan?
Okay, so see, we started as a platform, as a broker. So we wanted to first build on our distribution. So now we are almost doing business in more than 150 cities in India. Monthly we disburse 2,000 crores for various lenders. From past 1 year, what we have done is that once we have built our distribution layer, we have started creating new products. So we have a subsidiary called Homefinity, where we have tied up with about 10 lenders. We have created new products for very specific categories, and for them, by taking each and every profile of the customer, we are building new products. And the idea is, somewhere down the line, once we have learned how to do credit, today the credit which we are doing is in risk sharing model with certain lenders, and eventually would like to have our own HFC and build something for those customers.
Wow. Saurabh, please introduce yourself, but I'll ask the question also. Insurance has traditionally been a push product. And you all are focusing on discovery and management, right? So how does the technology shift the needle in 2035, where from push it becomes pull?
Well, very, very interesting question and very pertinent question in the changing times. Hi, good morning everyone. I'm Saurabh. I'm founder and CEO of CoverSure. We are basically building a consumer-focused AI-based intelligence platform for insurance, such that insurance can come very, very close to you when exactly you need it. Right? Just to answer your question, it's a very, very interesting, long question. See, insurance in India has largely been mistrusted, right? And why do I say that? Is because the consumer verdict, more or less, is that 42, 43, 44% of the policies are surrendered before their term is expired, right? Now, that's a very, very large consumer verdict, right? To your specific point on push, right? See, we have come about in this industry by seeing push because insurance gets sold when the seller wants to sell it. Be it the monthly targets, quarterly targets, right? The commission-driven agendas, or the new product launches. The element of pull can happen only when actually insurance shows up when you need it. Now, insurance as a product has been beautifully built for it to show when you need it, right? Which is, let's say, the moments or stages of life when you have a child, when you're planning a family, when your parents are entering the senior citizen, status, and so on and so forth, right? Technology, interestingly, has made that possible, has made the timing possible. But, timing is also, as I'm thinking, is not enough. There are three things which are, I would say, very, very important for the pull factor to come in by 2035, as you're asking me. So there has to be sort of a context, a comprehension, and I would say a trust, right? So when I say context, is essentially that insurance has to show up in the moment when you need it, right? In a seamless manner. You don't have to see insurance outside of the context of where you're living or in the moment. Comprehension is basically very, very simple. If somebody understands insurance, they will come back for it. The reality is, if I ask the crowd here right now, how much do you understand about your insurance? I'm pretty sure most people will not even look into my eyes when I'm asking that question, right? And as far as the trust is concerned, the trust basically, what I mean is that the definition of the headline changes with the fine prints. And those dark patterns has to essentially go away, right? So, at CoverShore, that's exactly sort of what we are doing from a discovery and management standpoint, as you're saying. We are bringing these three elements together: the comprehension, context, and the trust, right? Insurance has to show up when you need it. And by 2035, what I feel is that the job that insurtechs like ourselves and you and probably the larger insurtech, fintech industries got at their hands is to essentially bring the push and the pull moments sort of together using these three factors. And that's what I see is going to change between now and 2035.
No, I agree with you. Insurance is the most missold product on the planet, especially in India. So, what you all are building is commendable. While going through your profile and the company's profile, I was thinking when I was a banker and I was selling insurance. I have, or at that point in time, I was yet to come across a person who would ask me, what will my family get if I die at 42, 48 or 60, right? Everybody would ask me, what will I get at maturity? So everybody thinks he or she is Ashwatthama and will live till maturity to get the money. So while making this question and going through your profile, I was just thinking it's such an important product, but not very well sold. Thank you. Chirag, you are doing something super dynamic, man. You are working on scalable digital experiences. My question to you is 2035, the Gen Z and the Gen Alpha, right? Will the bank exist for them, or will it be invisible prompts that they will get on a daily digital feed?
By 2035, you'll have Gen Beta, right? The rate at which we have.
True.
But 2035 is far away, right? When you talk about prompts, when you talk about, the landscape is changing so rapidly. It's evolving so rapidly. Over the next few years itself, they are going to become redundant, right? If you largely look the evolution, I like to use the pull-push, but in the opposite sense here. The banking ecosystem has always been built as a pull factor, as a user, right? Anything you need to go somewhere to pull the information, right? 20 years ago, you had to go to branch. 10 years ago, you had to go to an app which you were carrying in your pocket. Most people, in terms of their visits to the app, will have reduced by 90-95% already, right? We are already moving from a pull to a push factor right now. So largely what now is that final phase where you need the confluence of regulation and trust, and they both will go hand in hand. But I think prompt is largely happening. Today you've got a refrigerators which can detect you don't have milk and order it for you based on your Amazon linked account, right? You can look at a food item which has been prepared, scan it with your glasses, and it will order the ingredients needed and give you the recipe to do it. So it's already there. It's just how widely it's spread is still being controlled. And as that happens, you will really see it, right? And from a personal perspective, I mean, I can clearly see that over the next couple of years, everybody could have literally an agentic AI PA, right? And it's basically an agentic AI PA with a power of attorney. If you largely look at it, the power of attorney will be determined by a user's trust in the system. But you have a power of attorney and they're going to run your bank. You don't need to be at a bank. A bank is largely going to become a custodian. And nobody visits. I mean, when you look at your mutual funds, you don't really go and visit a custodian, do you? All your investments, they might be held at a custodian, but nobody knows it's even there. And I think that's largely what the banks are moving towards, and it won't be 2035. It will be significantly earlier.
Fair. Naga, you are doing something on the mortgage side which is unbelievable, right? Using blockchain and AI to reduce the approvals from maybe months, days to hours.
Yeah.
So how will you balance that? You know, speed with security and trust.
So just to put something in perspective, because we are talking from the forum of Viksit Bharat. The financial system today is around $7 trillion, and I think we need to be to reach the goals of Viksit Bharat. We need to be around $120 trillion financial system, which means that banking assets today, which is around $4 trillion market kind of stuff, which should go to around 45, because today US is around, the banking assets itself is around $33 trillion, and then I think China is around $25 trillion. So, which means that the CAGR growth rate of banking assets would be around 15%. So this is from a study which I just read a few days back and got to know, which I'm just quoting. And so this is, which means that, effectively that all our decisions in banking has to become very fast, and which means we don't, we can't anymore invest so much of cost and time in doing these, decisions, and therefore we need to be very quick. And I think three of our friends here are talking about data, and then again, Navank is also doing something which is very much related to data. So data becomes the new currency and new oil to actually make the decisions faster. And then friends like Atul have already created the distribution channels out there. So combining this power of distribution with data makes sense for banking system to actually grow at CAGR of 14-15%. So now what we do at Navank is something which was not done for 40-50 years. I think mortgage is a 200-year-old industry, 250-year-old industry since it started in London and then has spread across worldwide. Fortunately or unfortunately, land is a state subject in India. So therefore, because of the federal system and other things, so therefore land documentation in Maharashtra is not similar to a land documentation in Karnataka, and then it is not the same in Rajasthan. So you will have to understand that documentation, and that's what takes time for bankers to do, right? Like bankers are heavy in certain geographies. Like if you talk about a Bank of Baroda would be very, very nice in Gujarat, Madhya Pradesh and certain parts. So similarly, Canara Bank would be very strong in South, though they have an all India presence. So, but their understanding, their approach, their ease of operation depends upon where they understand it very well. So same applies to NBFCs, HFCs and all. So how do we make a uniform understanding of property was the first thought process. Second was, can we have something similar to personal loan kind of a journey to home loan journey, right? Personal loan today, thanks to people like Bajaj and others, where it's happening in few seconds. HDFC does it in couple of minutes. So you get an account, you get personal loan, and the money lands in your account within couple of minutes. So, but all of us have some kind of properties, right? Some kind of assets in real estate, and real estate is the second largest asset class in the country after gold, right? While I can leverage gold to such an extent, my leverage on real estate is very, very slow, right? It doesn't matter whether you hold a small 30 lakh rupee house or you own a 10 crore villa or a bungalow in Mumbai, South Mumbai. But so the data there the uniformity of understanding the data is the key. And that is what we are trying to achieve at Navank. So what we do is we get the data from various government sources. We have built the end-to-end stack. So because banks are legitimate organizations, so I can't go to banks and say, look, this is the perfect data that you have and you just start using it from tomorrow. Nobody would buy that, because they would always say that, boss, we have been doing it from 45 years. Why will I trust your thing today which has come? So we have built all those traditional systems inside the stack, while that has become a source of data for me. So that data source is now with synthetic data that is available and the models that are available today. We have started estimating and giving out what could be the rates for these particular properties. So therefore, underwriting properties become easy. On the other side, the digitization has been happening at a very faster pace than expected in all Indian states. So the digitization helps us to get the land ownership documents, very easily accessible. So that is combined, and then we are trying to give very, I would say, a very comprehensive property assessment thing for the banks. So that combined with the power of AI. So so this is on the data side. The other side of AI is that banks did spend a lot of time in understanding the property construction stage and then quality of construction, and then ascertain what is the value of the property and all. So we have built proprietary data, proprietary AI algorithms over there, using computer vision and video and such kind of models, which helps bankers to just get it from the customer, understand whether this is the same property, then see what is the stage of construction and release the amount. So it is, I think, every 10-15 years we have very important change cycle. So ATMs were the first, our Y2K problem was where everybody started doing computerization of this one. Then the UPI moment was there. I think now we have the AI moment. I think this will continue for like next 10-15 years, and then nobody can discard that. I think we are going to just build in AI-led models for lending in India. So that's our focus.
Correct. One common question to all of you. What is the risk or the threat that you see which can derail the BFSI growth story of India? Anybody can start.
Hello, happy to go. So I feel one of the key things is going to be accountability. You can deploy AI solutions, okay, especially in the banking industry if you are talking. And when something goes wrong, first of all, are people really going to be able to identify where, how, when it went wrong, and who's going to hold the bag? That is a significant, on all the changes we are all discussing, that is probably going to be the most significant question to answer. Where does the responsibility lie, and who is going to be penalized at the end of the day? Right, till that gets resolved is going to be very difficult, but one of the biggest risks I see.
Yeah. So I think, from my perspective, what I think is, while the most talked about thing here is generally speaking cyber attacks, right? But as I see it, when we are building a lot of things on agentic, what we have seen is a bad agent, for example, with the wrong intent can actually missell to say about 100 odd customers, right? What can the capability of a bad AI agent be, right? So a bad AI agent built with malicious intent can actually missell to millions of users that very moment, right? Now, what happens this in the context of Indian BFSI growth story, specific to your question, is that, look, I think the bedrock of India's BFSI story is the first time formal finance users coming, right? Whether what he is building, right? Or with respect to different asset classes, how you are talking, right? And if a bad AI agent affects the very nerve on trust of those first time formal finance users, and just imagine if that gets, escalated to the social media platforms that are there, it will break the trust layer, which could actually then affect or take the industry back by 5-10 years maybe, right? So that's the biggest risk that I think exists. There is nothing called as trust layer getting built underneath the AI agents. And we all know that AI agents are coming.
Fair. See, just to add to both the points these friends told, see, I believe that the risk is not that technology will not work properly. I think the humane factor will be missing, and the reason is that financial services should have that humane factor. Again, going back to my example of that farmer. Now, government writes off the loans of those farmers. Now, how will technology decide that? How will AI decide that? So, you need to have that human factor. Means technology can be discriminating. Like we have very specific products in market catering to very specific kind of segments. There is a coconut planters bank in India, which only caters to coconut planters. So how will technology decide that? You can write prompts, but that humanity will be missing. And obviously, someone will work towards it. They will try to build some kind of structures over there or some technologies over there. So we'll have to see how that is developed. Otherwise, finance without that human element will be like a complete dictatorship. Because you cannot only decide on the basis of numbers or everything or logic that how the finance will work in a company. There is a factor of humanity over there.
But don't you think a human can be biased and tech will be not biased?
So that happens. That's the problem. That's why we are building technology, that a human being will be biased. Now if you go completely towards technology, then technology will not have that human factor. Like, today in home loans, if I again say, a customer is not able to repay their EMI. Example is COVID. So there was a moratorium. Now, how will you train your models that these kind of things should exist? And if a person is not deliberately defaulting, when suppose someone has lost his job, you will have to put those considerations so that you are not just penalizing the people. That's what I'm talking about. A human can be biased, a technology will be non-biased, but there should be some kind of human factor involved in financial services, then only people will survive.
Hi. I think, a common thread that I could see across my fellow panelists were two words actually, data and trust. And often these two are cross purposes, right? I mean, the world over we're seeing more data that's available, the more that leads to trust issues in terms of how that data is going to get used. So I won't touch on that as a challenge because I think my fellow panelists have already pointed out the perils of that particular trust deficit leading to erosion, over a period of time. I think I'd like to point out to something else which could really slow us down, which is adoption. I think Saurabh will know this. Even today, if you look at insurance sales, and you take, the largest of insurtechs, less than 1 or 2% of all sales happens digitally. So it's a nice concept to say, there'll be digitization and there'll be AI taking over. I think, but we have a long way to go in terms of making sure that there's adoption of these technologies. I think, buzzwords, could just remain what they are unless all of us as industry specialists and the people at large, whether it's trust or whether it's the quality of the technology, whether it's the user experience, I think the adoption is very critical. If the adoption is not there, then frankly, the entire thing could get derailed.
I think we have now had enough experience of building with regulatory framework, right? I think people have built, and finest examples in the BFSI sector has been companies like Perfios. Like when they started replacing the CPAs, it was just a digital revolution that was happening. But then the regulator brought in that concept of account aggregators, right? And I think regulator will definitely appreciate a trustworthy, reliable and a calibrated AI at data-driven algorithms. I think we are all moving towards it. So each of the founder is, I think, very well aware that as long as we are compliant, which means we are creating something which is trustworthy, then something which is calibrated and reliable will be accepted. They are also creating channels for innovations, like we have the RBI Innovations Hub now, and I think they are very open and receptive of the ideas that are happening in the market. And we also see, definitely we see that there's going to be a AI kind of a regulation that will come sooner or later, which will kind of happen, and I think we'll all be part of somewhere working towards it. Some may be working as a very strategic role, some may be just giving some points to it and then being members of it. But I think it's already seen. So we have a self-regulatory organization, which is the FACE, which is mainly the fintech based organization and all. So I think lot of things are happening. Risk is definitely there, because I think we have to be like, for example, Claude released the Mythos, and then we know that what kind of capabilities they come with. So how do we adopt that, or to build something which is Indian equivalent for banking system, which is again reliable and trustworthy, has to be thought through. So I think we will live with the risk, but we are yet cognizant that if you are building that in a reliable way, we will overcome this risk of unknown.
Fair. And brother, we will live risk day in and day out. That's why we are entrepreneurs, right? So I have one more question, but I would want to check if somebody from the audience wants to ask anything.
Hi. First of all, very good discussions, and I'm liking it about it. Myself, Dr. Manish Gupta, founder and CEO of BizNeuro AI. I was listening to you guys, especially Saurabh was talking about agentic AI as well as the bad agent basically, and the risk that is associated with the agent. Then what if we have the AI which is explainable, which can be a good source of information that you like to plug it along with the agentic AI? And the second question is about, let's say all of us are going to the AI world without realizing that could be very costly tomorrow. Because as you might heard about that, people are charging on the tokens and all. In fact, I was reading the news about the Uber CTO that their annual budget of the AI got exhausted within 3 months. How are you going to encounter this situation in future without value or adapting the AI in the BFSI space?
Sure, I'll take this. AI is a tsunami. Okay, it's a massive tsunami. I was recently, a few months back, I was in California, and the entire streets on that belt of California were all about AI this. What do you want to study next? What do you want your child to study next? Here is an AI solution, right? What is the new thing in the grocery that your kitchen should have? Here is the AI platform, right? You walk here, let's say, or in Bangalore, what will you see? You'll see hoardings of juices, fruits, so on and so forth, right? The world is very different. Specific to your question about the budgets, there is tremendous concentration of capital that's happening. You go to any venture capital, any growth capital, anywhere on the planet, you will see that the concentration of wealth moving towards AI is absolutely abnormal. Anthropic wanted to raise about 200 billion, I was told, and the book that they were able to garner in less than they expected was about 3 times of that. So I don't have a specific answer to how will this tsunami, that's why I started off by saying tsunami. When tsunami comes, it can take down anything and everything. That's the only reality as of today, right? Are we questioning the trust factor? No, we are not. That's a risk. I'm sure at some point in time those guardrails will come about, but I do see the risk that before those guardrails there will be some degree of damage that will be done. So it can be only post facto, because there is nothing which is chasing the AI, which was the case earlier, say about a year back or so. Now things are at best trying to move in parallel or in tandem with AI, not ahead of it. So whatever has to be done, let AI do, and then you come and repair it.
Yeah, thank you. I think that's you're talking about more reactive kind of a post facto kind of a solution. I think there is still a possibility in terms of the science that can be able to cater to, let's say, manage the budget in terms of not everything requires to go to the LLM. For example, we still have a lot of traditional systems and places, probably that would be also really well.
See, I think to be very critical of ourselves, there are both pros and cons to whatever you were asking. The criticalness of this is that, like, there are so many entrepreneurs out there who are just building wrappers around the LLMs that are applicable, and then they are claiming to be AI. Okay, so it is just not that. Okay, so you will have to build foundationally based on certain models, and then claim that you are an AI company. So, which comes to your point of budget, right? Like, so this fools the investors. So there are many VCs out there who have funded such kind of wrappers, and they get doomed in one day because one Anthropic one cloud release will just eat away hundreds of such startups, right? So we will have to pick the niche sector, which is very, very true to the Indian thing. Second, we should be aware that as startups we have that capability to manage the limited capital that you get, but yet you can get some very positive or a very meaningful outcome in AI front as well. Third thing is, like as he said, we are open for the tsunami. So you are already on the seashore. So tsunami has hit. You know that the wave is there. So the seashore is there, and you are already there standing, bare chested. So you will have to, embrace that tsunami and wait. So the only option is to build. So from the capital front to build something which is meaningful, niche, so that you have various options of you get M&A options, or you get somebody investing in you for a larger scale, and so that would be the way that
I will also answer what you said in a very different way, right? Could you have ever imagined that Elon Musk is going to discontinue Model 3? Okay, he has. Okay, can anyone, right? Let's say you are given $1 billion today, right? Would you still have that? I would say the guts, for the lack of any other word, to go and set up an electric vehicle factory, knowing where BYD is today?
Yeah, I think may not be. It is like it requires a lot of effort.
The reality is that the concentration will continue to happen, and budgets will keep on rising. It's not controllable.
Thank you for your comment. In fact, just to add, in fact, we are the one building some agentic routing just to manage these budgets as well as the explanatory part of it. Maybe I would share this feedback. Thank you.
It's a great outcome for you.
I think we are now done. Our session time is over. So outstanding discussion. I will be rooting for all of you all. All of you all actually should be working together. All of you all can add value to each other. You all get something on the table where you all can add value to each other. 2035 is going to be a tough road. There will be a lot of road blockers. It's not going to be a road where it's a race for speed only. It is going to be a